Hey everyone, and welcome back to channel. April 2nd, Tesla just dropped their Q1 2025 delivery numbers, and let me tell you, the internet is buzzing. The numbers are out, the analysts are analyzing, and the stock market, well, it's doing its stock market thing. But what do these numbers really mean? Are they a red flag for Tesla? Is the EV giant starting to lose its edge? Or is this just another misunderstood quarter, with a deeper story hiding beneath the surface? That's exactly what we're going to unpack today. We're going to break down these delivery numbers, look beyond the headlines, and try to understand the real narrative behind Tesla's first quarter of 2025. Alright, so let's get right to the numbers. Tesla announced they delivered approximately 336,000 vehicles in the first quarter of 2025. Now, here's the thing. It's a bit below what they actually produced, which was around 362,000 vehicles. That's a gap of about 25,000 cars. And that gap, my friends, is where the questions start. Because Wall Street, those folks who were expecting even higher numbers. Official estimates were around 377,000 deliveries. And even the unofficial whisper numbers, those expectations floating around in the industry, were closer to 355,000. So yeah, 336,000 is definitely below expectations. Now, before we jump to conclusions and start writing Tesla's obituary, let's put this in a bit more context. Think back to the previous 2 quarters. Tesla was cranking out Model 3s and Model Ys at a pretty impressive rate, somewhere between 435,000 and 445,000 vehicles combined across those quarters. But in this first quarter, total production dropped to around 345,000. That's a significant dip. About 90,000 to 100,000 fewer vehicles compared to those previous quarters. Okay, so the big question, the one everyone's asking is, does this mean Tesla's in trouble? Are we seeing the beginning of the end? Are Elon Musk's, shall we say, colorful political statements actually damaging the Tesla brand? Are we heading for a Tesla stock nosedive? Well, let's take a breath and unpack this step by step. First things first, production and delivery are 2 different things. This is crucial to understand. Tesla's Model Y factories globally were undergoing some pretty significant upgrades in Q1. Think of it like renovating your kitchen. You know it's going to be better in the long run, but for a while, you're eating takeout and washing dishes in the bathroom sink. Same idea here. These Model Y production line upgrades likely caused a loss of around 100,000 vehicles in production, based on previous production rates. Around 30,000 Model Ys per week in Q3 and Q4, even factoring in the usual seasonal slowdown in Q1, you're looking at a significant production hit. So if you add back those potentially missing 100,000 vehicles, the delivery numbers start to look a whole lot different, don't they? The real question then becomes, is it a demand problem or a supply problem? Is Tesla unable to make enough cars, or are people just not buying them as much? Let's talk about demand, starting with the seasonal factor. Historically, Q1 is always a bit slower for car sales. It's just the nature of the business. People are often recovering from holiday spending, and the weather in many parts of the world isn't exactly ideal for car shopping. So some drop-off in Q1 is expected. But what about specific markets? Europe, for example, has been a bit of a mixed bag for Tesla lately. There's been negative press around Elon Musk's political views leading to some consumer backlash. Plus, competition is heating up, especially from Chinese brands like BYD, who are making serious waves in the EV market. And, let's be honest, some people are saying Tesla's product lineup is getting a little mature. The new Model Y refresh hasn't seemed to give the demand boost some were hoping for in Europe. So, yeah, Europe probably took a hit in Q1, and that definitely impacts the overall delivery numbers. However, and this is important, we can't just look at one region and declare the whole company's doomed. Europe is Tesla's 3rd largest market globally, but it's not the only market. Even in Europe, we saw some really promising signs. In March, some European markets actually started showing growth. Spain, for example, saw a 34% jump in sales in March, and Italy was up a whopping 51%. And get this, Tesla's Berlin factory, right in the heart of Europe, just produced its 500,000th Model Y in March. They're cranking out over 450 cars per day there now. So while Europe might have had a tough Q1 overall, there are definitely pockets of strength and signs of recovery. Now, let's pivot to China, because this is where things get really interesting. After the Chinese New Year holidays, Model Y sales in China absolutely exploded. In the last week of March, Tesla China saw new car registrations hit 21,000 vehicles. That's a 20% jump week over week. It was their strongest week so far in 2025, and their best performance since December 2024, getting super close to their all-time record from 2022. Talk about a rebound. The Shanghai Gigafactory, which produces the new Model Y, is apparently running at full capacity, super efficient, and demand is still incredibly high. Rumor has it they started the year with over 200,000 pre-orders in China alone. And Tesla China is adding fuel to the fire with some seriously tempting promotions. A free month of full self-driving trial and 3 years of interest-free financing. Those are the kinds of deals that really move the needle. What about the US market? Well, Forbes report that paints a fascinating picture. Outside a Tesla store in North Hollywood, the protesters were shouting loudly, but inside, customers were busy queuing to test drive the new Model Y, completely ignoring those signs. During peak hours, there were more customers in the store than protesters. The showroom was crowded, the waiting area was full, and even the parking lot had many people browsing around. These protests had almost zero impact on customers. Everyone's attention was focused on the newly launched Model Y and Cybertruck, especially the Model Y. The parking lot attracted a crowd of people waiting in line for test drives, and some were even placing orders and taking delivery. It's a great reminder that sometimes the loudest voices aren't necessarily representative of the broader consumer sentiment. Yes, there are criticisms of Tesla, but there's also still a huge amount of excitement around their products. Now, there's been some talk about Cybertruck sales maybe not meeting Musk's wild expectations, but let's keep in mind that Cybertruck and other niche models only make up about 5% of Tesla's total sales. So, while interesting, they're not the main driver of the overall numbers. And it's not just China and the US, Tesla is expanding globally. Pre-orders for the new Model Y are starting in South Korea. They're launching in Saudi Arabia this month. And they're gearing up for sales in India. Musk himself has said they're going to expand into even more markets in 2025. The only thing Tesla really needs to know about demand is their order intake rate, and that's something only they have access to. We'll have to wait to hear from Musk on that front. But Tesla Asia recently tweeted a pretty encouraging message. More deliveries come along with the spring. Sounds like they're hinting at a positive outlook for the rest of the year. Okay, let's circle back to those delivery numbers being lower than production. There is another really smart strategic move by Tesla. Traditional automakers often ramp up production of older models before factory upgrades to keep deliveries steady during the downtime. But that ties up a lot of cash and increases inventory. Tesla seemingly took a different approach. They actually reduced production and inventory in Q4, even when deliveries were already slightly below expectations. They got their inventory down to just 12 days, way below their usual levels and much lower than other car manufacturers. This was all part of the plan to clear out old inventory and prepare for the new Model Y production ramp-up, while also keeping their cash flow healthy. And get this, even Tesla salespeople were reportedly advising customers who wanted a Model Y to wait for the new version. Kathy Wood, of ARK Invest, actually mentioned in an interview that Tesla told her to hold off on buying a Model Y until the new one came out. That's pretty confident and customer-centric, right? It shows they're focused on the long term, even if it means a short-term dip in deliveries. So yes, Q1 production and deliveries were down, but when you dig deeper, it looks less like a crisis and more like a planned strategic maneuver. Tesla seems to be prioritizing long-term value for investors and customers, even if it means some short-term pain. And that kind of long-term thinking, that DNA, is a big part of why Tesla has such a dedicated global fan base. It's not just about the stock price going up and down, it's about believing in the company's vision. And about that 25,000 vehicle gap between production and deliveries, it could simply be cars in transit. 5 days worth of production isn't a huge backlog, especially considering the new Model Y production ramp up. It's likely just a temporary logistical blip. Now let's put this Q1 performance into perspective. Yes, Tesla's numbers were below expectations, but compare them to competitors. Rivian, for example, when they were doing their own production line upgrades, saw deliveries plummet by 36% year over year. Tesla's deliveries, while down, were only down about 13% year over year. That's actually pretty good in comparison. So, all those headlines screaming about a 50% sales crash and Tesla stock collapsing? These negative narratives are being deliberately amplified during Tesla's production transition and the usual Q1 slowdown. Essentially, noise designed to create fear and uncertainty. But here's the real kicker, the hidden gem in this Q1 report. It's not the cars, it's the energy storage business. Tesla deployed a staggering 10.4 gigawatt hours of energy storage in Q1. That's up 156% year over year. It's their second best quarter ever for energy storage. 10.4 gigawatt hours, think about that. That's enough to power 3.6 million homes for an hour. That's like powering a medium-sized city. And Tesla's new Megapack factory in Shanghai just started production at the end of Q1. When that's running at full capacity, it's going to be a massive growth driver for Tesla, and the financials are even more impressive. In Q4 2024, Tesla's energy business had a gross profit margin of 3.6%. That's double the 16.3% margin on their automotive business. And energy business profits are up tenfold compared to Q1 2019. Megapack and other energy storage products are rapidly becoming Tesla's golden goose, showing that their energy division is truly coming into its own. Why is Megapack so important to understand when looking at Tesla? Because if you get the Megapack story, you can tune out a lot of the noise from Wall Street analysts. You've probably heard the chatter that Tesla's car deliveries might not grow much in 2025. But that's because a lot of analysts are still stuck in the old mindset of traditional auto companies. They're not fully grasping Tesla's broader business model. Think about it this way. What if we see Megapack as just another type of Tesla vehicle? It's just a square box without wheels, right? It uses even more batteries per unit than a regular EV. Let's do a calculation. If you convert Megapack deployments into an equivalent number of 80 kilowatt hours battery packs, the kind you'd find in a car, over the last 12 months, Megapack deployments are equivalent to about 472,588 car equivalents. That's up 154% year over year. When you add up the automotive and energy businesses using this car equivalent metric, Tesla delivered a total of 2,211,685 vehicles in the past year. And that total is up 13% year over year and a massive 43% compared to the year before. And get this, Tesla is planning to more than double its energy storage production capacity, aiming for 1.2 million 80 kilowatt hours car equivalents. That's 2.5 times their current output. So when you really understand these numbers, when you see the strategic moves Tesla is making, and when you recognize the massive growth potential of the energy storage business, how does your view of Tesla change? I'm genuinely curious to hear your thoughts. Let me know in the comments section. What's your take on Tesla after digging into these Q1 numbers? That's all for today's episode. We hope we've helped you cut through some of the market noise and see a clearer picture of what's really happening with Tesla. Remember, it's about looking beyond the headlines, understanding the context, and seeing the bigger picture. If you enjoyed this episode, please subscribe and share it with someone who you think would find it interesting. Until next time, stay curious, stay informed, and stay tech savvy.